You might think that there's no stopping this rally. It seems like that, doesn't it? But what happens to the markets, to your money, if we don't get tax reform? Good question to ask Dan Shaffer, President and CEO of Shaffer Asset Management. And you, sir, are a permanent bear. Wait. You're the one who has come on this program for years and years and years and said the big crash is coming. You think that the crash is coming, the sell-off is coming, if we don't get the tax cut, right?
I think that if we don't, well, first of all, the tax cuts are not going to be good for the economy. No matter what happens, it's less revenue to the government, and they're looking to cut the fiscal side, and they're just not going to agree. So I don't think this is ever going to happen. I think it's going to go through major stages. Here we are, October, and they told us we'd have it in July, August, September. It's just not going to happen.
But if we do get it, and there are tax cuts, you don't think that stimulates the economy?
No, because now here's the whole picture. You cut the taxes, you have less revenue coming into the government. That means part of the negotiations,
initially,
right? Part of the negotiation has to be to cut fiscal spending, okay? And this tax cut plan is all based on a higher GDP than 3%. Now, the Federal Reserve, let's bring the market into this for a second. The Federal Reserve, the United States Federal Reserve, the ECB in Europe, and the Bank of Japan are right now in a Hail Mary desperate situation to get inflation up. And the reason they're trying to do that is because of the debt, the amount of debt that the sovereign countries have cannot be sustained unless they get inflation to pay it with less dollars in the future.
Okay, so
that's their plan.
So to you, the debt bomb is the bomb.
Oh, next year, the sovereign debt is going to be on the headlines. You're going to be talking about it every day. You think Puerto Rico's a big issue? Wait until the debt of all these countries that can't pay it back at all now are going to be in trouble, and you're going to see the debt explode from the sovereign debt, from a country point of view.
Okay.
And that's why the Federal Reserve, now let me tell you what goes on every morning. They jam the yen down around 5 to 7 o'clock in the morning. They try to push the futures up here in the United States. That carry trade, people need to understand, and people on this network and other networks don't seem to get a handle on that. The Japanese yen can be sold short against the U.S. dollar at zero cost, right? Interest rates in Japan are zero.
You've lost them.
I'm sorry, but it's just,
you lost them.
Well, the money's coming out of the currencies into the equity market.
There's a debt crisis coming.
Absolutely.
No way around
a sovereign debt. United States debt, European debt.
So you're advising our viewers who hold stock, sell it. Get out now, get into cash. Is that your advice?
I'm advising people now that now is the time to lighten up, to put your stops in, and get ready for a descending market that may spiral down for several years to come. Now, I'm not the only one. You've had David Stockman on here. You had Jimmy Rogers on here. I'm not even as smart as them, but it's very clear that this market going up is an induced program by the central banks of the world because they're desperate to get inflation up, and it's just not going to happen.